The worse the fiscal situation gets, and it's continually getting worse, the more sense it makes as Bitcoin as a hedge. Now, I'm not saying Bitcoin's going to go up in a straight line. We can see that it doesn't go up in straight lines. It does follow market cycles, but the long-term curve, the long-term compound annual growth rate is always going up. So to give you some more context on that, the reality is if we get some short-term financial crisis and recession, yes, Bitcoin will become even more volatile. It will probably go down for a short period of time, as we're seeing now. Bitcoin's a risk asset and it's a bit further down on the risk curve, so it will drop alongside everything else. The market doesn't care about long-term fundamentals and thesis and narratives when people are panicking and selling everything for cash. Think about this: the short-term volatility is the price you pay for long-term protection against monetary chaos and perpetual debasement and inflation. And if, like me, you're building a retirement portfolio with a 5 to 10 15-year horizon, you can afford to ignore the noise out there and the narratives. Think of the noise out there and the volatility as temporary. It's a little bit like bad weather, right? Some people like to weather the storm. They'll buy and hold. You've probably heard the term hodl or hold on for dear life. I don't do that. I use a traffic light system. I've made a video about it. If I see the markets are rallying, there's good structure, there's good buyer behavior, there's a nice inflow of liquidity into Bitcoin, I'll hold Bitcoin now and I'll ride those sustained rallies. But when I start to see structural risks in the market, if I see, liquidity drying up and poor behaviors in terms of money flows and things like that, then I start to rotate back to stable coins and preserve my capital.